to Eurofair's biannual State of the EU Steel Market and EU Trade Policy webinar. We will be starting in a few minutes, but I'm just waiting a little bit for other participants to join. So please hang on a few minutes. To Eurofair's biannual Hello and welcome to Eurofair's biannual Steel Market and EU Trade Policy webinar. We will be starting in a few minutes. I'm just waiting for participants to join. Thank you. Okay, I think we can begin. Thank you for joining us today for Eurofair's biannual Eurofair Steel Market and EU Trade Policy webinar. Today, we will be speaking with Alessandro Sciarra-Morelli, who is the Eurofair Director of Market Analysis and Studies, and with Karl Taschle, Director of External Relations and International Affairs at Eurofair. We will start with Alessandro Sciarra-Morelli, who will give a 20-minute presentation on the EU steel market and outlook, followed by Karl Taschle, who will give an overview of EU trade policy and its relationship to steel at the moment. And that will be followed by a Q&A, which I invite you to use the Q&A feature in the webinar and not the chat feature. That way we will try and follow up with as many questions as possible in the time allowed. Please stick to questions related to the issues that we are discussing today, such as the steel market and the EU trade policy. We're not here talking today about climate policy or the EU industrial strategy per se, though we might address those if necessary. We will be releasing the economic and steel market outlook at exactly 12 o'clock, and that will be available on our website at eurofair.eu. And with no further ado, I would like to invite Alessandro to turn on his camera and to start his presentation. Thank you very much.
Thank you very much, Charles. Good morning, welcome everybody. I'm Alessandro Sciarra-Morelli, Director of Economic and Market Analysis at Eurofair, and I will now present basically the main trends and figures resulting from our latest data collection, which will be reflected in the quarterly and economic outlook that will be released very, very shortly. And so I will now start with my presentation, which which presents, first of all, the state, let's say, the macroeconomic conditions in the EU and also in the US, which is another comparable major economic region. You see here the latest evolution of quarterly GDP data up to Q1 2021 and evolution of growth forecast according to major international forecasters, and also according to our latest forecast, which is available on the right-hand side, Eurofair forecast April 2021. So basically what's happening is that as you'll know, you're aware, in 2020, due to the pandemic, Western economies have experienced the worst economic recession ever, at least in the EU, a recession of -6.3%, and also in individual economies. Due to the intensity of the magnitude of the recession, which has continued up to the end of 2020. Also, Q1 2021 figures have been affected by the downturn in the overall economy, and therefore we see still negative quarter-on-quarter growth rates, with the only exception of France in Q1 2021. Whereas the US are experiencing a stronger than expected economic recovery, which is almost running already at full speed, also thanks to powerful government support. So also in 2021, the US are expected to outperform economic growth in the EU, where by contrast, economic growth is expected to be slower and still subject to wide uncertainty, which continues because of the ongoing pandemic, which is still affecting the economic environment, at least until second half of this year, where growth should pick up considerably. At least this is the main expectation, thanks to restored confidence also in the services sector, which has been most affected by the pandemic, and also thanks to successful implementation of vaccination plans. But however, growth will remain in the EU below the growth rate, which will be experienced by the EU and also by China, which are already, as I said, running almost at full speed. So very quickly, this is an overview of confidence indicators and evolution of confidence in the EU for the economy as a whole and for the industry. You can clearly see plummeting confidence since the onset of a pandemic in early 2020, and also for the industry, followed by a very strong rebound over Q3 and Q4 2020, which has continued up to the latest figure available, which is February this year. But however, what is interesting to see here is that the recovering confidence and also in economic activity has been almost entirely industry driven. So while the industry has experienced a considerable rebound and growth in confidence and also in output, services have continued to remain very weak and depressed due to restrictive measures still in place in most member states. So hotels, restaurants, and tourism have been widely affected. So this is the picture which is set to continue at least until the second half of this year. But the recovery appears to be primarily driven by the industry, and as we will see here, we will have an overview of what is happening in major steel using sectors since Q1 2019, which is exactly when a downturn in manufacturing activity has been seen across the EU, which has resulted already in a recession in 2019 before the onset of a pandemic. So we see a decline in steel using sectors output. Here we have reported the three most important three sectors in terms of steel weight out of total steel consumption, that is construction, mechanical engineering, and automotive. Construction has been relatively more resilient, but then has also been, let's say, experiences positive growth rates until the onset of a pandemic in early 2020, but then has plummeted also in Q2, whereas mechanical engineering and automotive were already in a downturn. And then you see the record falls in Q2, followed by strong rebounds in Q3 and quick Q4, quarter on quarter, which, however, have not resulted yet in return to positive territory, with the exception, and this is very interesting, of automotive, which is the red line, but particularly domestic appliances, which have, let's say, a rather smaller fraction of steel consumption, but are an interesting case because the rebound has been really very, very strong. And we believe that this is probably something connected to the pandemic, in the sense that widespread remote working has probably boosted the demand for durable goods, which can improve the quality of work at home and so forth. Automotive has experienced the toughest quarterly recession ever in Q2 2020, minus 51%, and then has rebounded very strongly, but then you see starting from very, very, very low levels in Q2 2020. And it has been the most affected sector throughout the recession that had materialized since Q3 2018 up to Q2 2020. Here we see an overview of other major industry leading indicators, that is order on the left-hand side for construction, mechanical engineering, and automotive, that is motor vehicles, and also for metal goods. And you see clearly the same developments which were observed in the previous slide, with construction orders in the construction sector much more resilient and stable until the outbreak of a pandemic. And the other, whereas the other sectors already experienced the downturn in orders, starting from Q3 2018 throughout 2019. So a clear deterioration in orders and in the industrial landscape, until the onset of a pandemic, which resulted in plummeting orders to very low levels for all the sectors, followed by these very strong rebounds, which resulted then in early 21 to return to positive orders for automotive, which is very consistent with the rebound in output which we've seen in the previous slide. So the automotive sector has fully recovered the losses in output and orders experienced during the pandemic, but remains rather low in historical terms, but has rebounded very strongly, and also mechanical engineering and metal goods. But however, if we look at the right-hand side, when we look at the industrial production actual data, unfortunately, Q1 2021 data is not yet available, and although we have some preliminary figures which shows that we have some rather small but slightly positive developments, so an increase year on year in Q1 2021. But however, you see clearly the same developments which were reported for orders and output. So you see deterioration in growth rates, negative growth rates all across, throughout 2019 and started from Q3 2018. And then with the situation worsening, culminating in record falls in industrial production on a quarterly basis up to down to minus 30% in Italy and Spain. Then followed by 2 consecutive quarter-on-quarter rebounds, which however did not translate into year-on-year positive growth rates, albeit these were negative but much smaller at a lower rate than obviously than in Q2. But we see an improving trend, although year-on-year growth rates are still negative, which should materialize are expected to materialize in positive growth rates in Q1 2021. And then, as just to recap what we've seen so far, this is an interesting slide which, in a nutshell, compares the impact on steel using sectors of the COVID-19 recession, that is 2020, the impact of we call the pre-COVID recession, which started already in 2019, and the impact of a previous very big economic recession which affected Western economies, that was the 2009 financial crisis. And what you see here basically is 3 things. The first is that, okay, as we see, steel using sectors were already hit in 2018 and 2019 by the worsening condition in the global manufacturing sector, primarily because of mounting tensions in international trade environment due to US Section 232 and other restrictive trade measures. The downturn in the manufacturing cycle, particularly in automotive, which is largely export-driven and was very much affected by the deterioration in international trade. And the second thing is that automotive paid the highest price already in the pre-COVID-19 recession, that is in 2019, with a fall in output of almost 5%, but also in 2020, due to the pandemic, the fall in automotive was the most severe across steel using sectors, where, for example, construction was, as I've said earlier, has proven more resilient, relatively more resilient, and still experienced positive growth in 2019 by 3.3%, but then also fell as other steel using sectors in 2020 by -5%. The third thing is particularly interesting in our view, is that the impact of the COVID-19 recession has been lower on steel using sectors and on industrial activity than in 2009. You can clearly see the impact on total SWIP, which is steel weighted industrial production, was in 2020 was -10.4%, which is obviously irrelevant, really a considerable impact, but it was even bigger in 2009, was almost 20%, and so forth for the other major steel using sectors. So this is an overview of what is happening in steel using sectors during the current recession and previous recessions. And here we come to latest steel market indicators. This is a chart which will not be available in the quarterly economic market outlook, but is available from the data which are on our website. And I think it is very helpful to put the steel market in the EU into context, and to put and to compare the EU as a steel producer, as a single steel producer, compared to other major world economies and steel producing regions. So you see a long-term decline in steel production in the EU. So basically what has happened here is that the impact of the 2009 recession, as well as for industrial sector, was bigger for steel production than in 2020. So we had a recession of almost 30% in 2009, and the recession in 2020, according to the latest available data, was minus 12%. And in actual absolute volumes, the crude steel production, which here includes all qualities, in million tons, have never recovered from the losses experienced in 2009. So despite the recovery which has been seen in the years prior to 2020, volumes have been lower than the highs which were reported in 2008 before the 2009 recession. We already had, as a result of the manufacturing and steel using sector recession in 2009, a drop of minus 6%. Which was followed by a minus 12% drop in 2020. And as a result of this long-term decline, as we say, in steel production, the compound average growth rate over the entire 2008 to 2020 period was minus 2.7%. And the same pattern actually applies, here we've seen the supply side. Here, the same pattern applies on the demand side. So we present here data for apparent steel consumption in the EU. Here we present quarterly data which better show, let's say, quarterly fluctuations, but the pattern and the trends are very much the same. So we see here the levels prior to the big recession of 2009, and then you see apparent steel consumption volume plummet. Then we see a rather long recovery starting from 2013, and then the start of a downturn also in the manufacturing sector and in steel using sectors in Q3 2018, which inevitably impacted steel consumption and had a strong impact on demand, with a clearly downward trend in apparent steel consumption since Q1, at least Q1 2019, which has culminated in the record drops, and we will see in the next slide, in Q2 2020, which was the lowest point of the cycle, which was a trough. And then since then, in Q3 and Q4, we've had two quarterly consecutive quarter-on-quarter rebounds, which are quite significant and which could signal a new trend, an upward trend in apparent steel consumption. We will see what the next quarters would say, but it is important that we've seen this trend reverse over the last two quarters. But then in absolute terms, in historical terms, apparent steel consumption is still around low levels. And here we see a snapshot, a more detailed look at year-on-year growth rates over the last 8 quarters in apparent steel consumption in the EU, and also in imports, which are obviously an important part of demand. As you can see, apparent steel consumption consistently with the pattern that we've seen for steel using sectors production and overall consumption, over the last 8 quarters has continued to fall since Q1 2019, at least, reflecting deterioration in international trade, in steel demand, and continued destocking, reflecting the fact that steel producers were expecting lower consumption levels, and then the stock cycle went down considerably. These quarter-on-quarter falls have culminated in a record drop in quarterly terms in the EU by 24.4% in Q2 2020, which was the trough of the cycle, as we've seen. Followed by, you see here in Q3, we had a quarter-on-quarter rebound, which, however, translated into another year-on-year fall, albeit much smaller, but still quite significant, minus 10%. And then at last, I would say, in Q4, apparent steel consumption growth has returned to positive territory, with a 3.3% increase, signaling that the recovery in steel demand is taking place, and could continue over the next few quarters, together with the improvement of the industrial and economic conditions. In annual terms, for the whole 2020 year, apparent steel consumption has fallen by 11%, which is a second consecutive annual drop, which follows the minus 5.3% fall recorded in 2019. Minus 11% is a bit lower than our previous forecast, which was relatively more pessimistic, was minus 13%. Then apparent steel consumption is set to rebound in 2021 by 11.7%, but bearing in mind that we start from very, very low levels seen in 2020. And real consumption which is apparent consumption corrected by the stock cycle, is set to experience the same pattern, a drop of minus 10.4% in 2020 and a rebound of 7.7% in 2021. The last slide, before I leave the floor to my colleague Carl, who will speak more in detail about trade issues, is something which is helpful to introduce trade policy and trade aspects. This is something which shows the fact that despite very weak market conditions over the previous quarters, and despite the deterioration in new steel market conditions, the market share held by imports out of total demand, out of consumption, has not decreased, particularly for flat products, which are important for the automotive sector. So you see here the evolution of the share of imports out of demand for the two main steel products, flat and long. You see higher levels of higher share of imports for flat, with some fluctuations. In Q2 was an unusual peak of 22.3%, but then it has decreased, but it remaining around rather high levels, whereas it has proven more stable for long products, where we have lower shares around 9%. But then it's important to show that despite falling demand, import penetration, let's say, has remained more or less stable in the EU. So this is all from my side, and then I leave the floor to my colleague Tar Tashleh, who will speak more in detail about trade policy and trade issues. Tar, the floor is yours.
Yes, good morning also from my side. Thank you, Alessandro. I can share some slides, a bit of background. I will do this now. So that should be fine. Look, yeah, trade policy, it's always a vast topic. I do not want to bother you with a lot of different things which we look at from this perspective, but would rather focus on the obvious topic, which is now imminent for decision making, which is the fate of the EU steel safeguard. But before that, I would like to present a highlight, let's say, a more global picture, in addition to the European perspective given by Alessandro, but also it's important, we think, to see the bigger picture and the long-term picture, not to lose sight of that, which is a bit obscured by the current exceptional situation in the steel market, referring to price increases and supply tightness or demand and supply imbalances. Of course, this is first of all about the capacity situation, and globally. Global excess capacity is persisting, it's worsening, and compared to production levels up to 2020, or latest view, let's say, of 2020 is estimated that around 650 million tons excess capacity, the gap, which is 3 times total European production capacity. It's not only growing, but it's also worsening in terms of proliferating. That means, of course, the driver of the global excess capacity has been China, and that has not changed. But on top of China, you have other regions which have been more recently investing and continue to invest in their own capacities. Most of the projects are basically aiming at substituting, replacing imports by own domestic production as part of the industrial development. And this is, of course, worrying because it is happening in all different parts of the world, again, in addition to China. Turkey, Iran, massive capacity buildup, Korea, Vietnam, Brazil, Russia. We see it developing from all sides. From the European perspective, it happens, further capacity buildup happens in key markets, which are neighbor to our European market, as well as in further distanced market. The second market-related view, but taking a bit of distance here, distance in terms of the history, the evolution in time, is when we look to the European trade situation. We see that, in fact, there has been a structural change in our trade balance. For a long time, for decennia, Europe was, with sometimes an exception, occasionally, but was structurally a net exporting market. And this has changed. In fact, looking to the statistics, this has changed in 2016 and continues to be the case. So we are now 5 years later, and we see a trend of steel trade deficit. These are finished basic steel products. And this trend of deficit in steel trade is a combination of the two factors which calculate the balance. That is, on the one hand, the surging imports, and on the other hand, is gradually but systematically declining exports. And that is worrying. If you lose market access in third markets, that is a challenge, that's a problem for the industry in Europe, because unlike the US, the EU always has been an important exporter of its finished steel, 20 to 25 million tons. So that is eroding over the last years, and that is a cause of concern. Of course, what has accelerated or intensified this is the US Section 232 of 2018, and still ongoing. But also a bit less visible, but we have lost significant markets, which were traditional export markets, for example, in North Africa. And this particular Algeria, where we lost a couple of million tons in long products, simply because of protectionist policy over there. A last point here, before going to make the link with safeguard, is that, and I've tried to visualize this also in the graph, that is that, yes, the EU has been active in investigating and imposing the anti-dumping and anti-subsidy duties, in particular in response to the China export crisis of 2015. But still, notwithstanding the multiple duties which have been imposed and applied, did not stop or avoided the risk of deflection caused by the Section 232 in terms of a global deflection of trade towards European market, which basically means that tackling unfair trade, subsidization, dumping practice is what we call our punctual actions. These are individual actions for one product with regard to one country. A safeguard is about the global situation of certain trade or import pressure a country experiences. Of course, here we look to our own European steel safeguard. irrespective of the source of the trade, of the export search to our country. So that is, the safeguard is of another dimension and of another concern than individual anti-dumping and subsidy cases. And we hear often the argument, yes, but steel in Europe has already so many anti-dumping duties. Well, one can discuss this. Compared to the US, we do not have. But whatever, the purpose of a dumping and a subsidy case is different than a safeguard case, and one does not compensate for the other. Then let me finish and go into the specifics, a bit more into the specifics of the steel safeguard, and take the opportunity to present you our, let's say, fundamental views of the situation. The steel safeguard is close to its end, which was adopted for the period of 3 years. This was starting, I think it was in May or June 2018, immediately after the US imposed its Section 232. Our view is that the conditions that led to the imposition of the safeguard 3 years ago are still there. More than ever, I would say. First of all, the Section 232 is still there. Section 232 remains applicable. There has been a process of product exemptions in which also European exporting companies have participated. But the process has been so restrictive that fundamentally the restrictive impact of the US Section 232, which is a tariff on the first ton, has been intact, has remained intact, and has indeed, as you see also from the graph here, has indeed been successful in pursuing its purpose. The purpose of Section 232 is to have a structural reduction of volumes of steel into the US. This is still ongoing because this was the trigger for the EU steel safeguard in a context of global excess capacity. This first and major condition is still present, and therefore an important factor for consideration by the Commission and the Member State, who are now looking into the question whether or not to decide on an extension of the safeguard. The second condition, and that is closely related to the Section 232, the excess capacity, as I mentioned at the start, the excess capacity is not solved, of course. On the contrary, it has been worsening and is expected to worsen. So the basic conditions for the EU Steel Safeguard 2018 are still there, which is the starting point for the decision makers in Europe to look into the question of a possible extension. Another aspect that not typically, but what even legally needs to be considered for the decision makers to decide whether or not to extend the safeguard is to look at the situation and the efforts the European steel industry would have made over the period of the steel safeguard since 2018 in terms of adjustment. The underlying idea of a safeguard action, a legitimate and legal safeguard action, is that you can have for some time some protection against import surges, irrespective of the source or the country of origin. But you as an industry, you have to work on improving your competitiveness to be better capable of confronting import competition when the safeguard stops. A safeguard is an exceptional temporary measure. But the time which is legally allowed for safeguard can go up to 8 years. So the two basic conditions are there, including adjustment. Of course, steel has been suffering from several crises, basically starting in 2009 with the global financial crisis. 2 years later, in the EU, in the Eurozone, we had the Eurozone crisis. This all had drastic impacts on demand and created immediate critical situations for steel production and supply. Then in 2015, we had then the China export explosion of steel, flooding markets worldwide, 100 million tons. And then we had in 2019 already a significant weakening of the demand in Europe, which then went into the crisis of the COVID. So since 2009, we have been stumbling from one economic crisis situation to another, which means that adjustment has been taking place, most visibly in terms of capacity reduction. We estimate around 25 million tons have been permanently closed since 2009. Most recently, there has been capacity closures of around 3 million tons in 2019. So this is, of course, a process which started way before the steel safeguard, but has continued. There are other types of adjustment in terms of investments and cost improvements, but also more and more environmental investments. And of course, not to forget the major challenge of the decarbonization. Let me finish just by give you a couple of the key principles and the key views we have on the safeguard. In particular, as we have read and heard a lot of arguments from different sides of economic operators in Europe, but also outside, and even governments, third governments. And we have heard a lot of confusing things. We consider the following points are critical for a good understanding what the safeguard is and what it is not. The safeguard, and in particular the safeguard as designed by the EU, which is fundamentally different from the Section 232, but is also fundamentally different, as I mentioned, from an anti-dumping measure or an anti-subsidy measure, while these measures, as well as the Section 232, are tariffs on the first and the last ton that enters, while the safeguard, as we all know, is basically a tariff-free quota system. It ensures that there is no burden on imports within the quota volume. Yeah? And in this respect, this safeguard, this quota system is solely aiming at providing a safety net against market disruptive import surges. It's not a tool to micromanage or to react to short-term volatility in the market. It cannot be, it's not designed for that. We as European steel industry, when the COVID crisis broke out last year in March, we saw the immediate impact on the orders. The customers stopped ordering and they depleted their stocks. We asked for an immediate reaction, a reduction of the quota to accommodate the situation, the drastic critical situation in Europe. And the response from the Commission was no, the quota is not there to follow the volatility of the demand. Now that principle, which created some frustration with us, but that principle then also should be applied today when we are in the other extreme of the imbalance. It's not micromanaging demand. As mentioned, it's not an unfair trade measure because it is looking to the global situation of trade flows heading to the EU or the risk thereof. We hear from steel users in particular that the safeguard should not be extended in the current situation, because the prices are high, they are too high, and the European steel producers are not able to immediately satisfy all the demand from the customers. So that again is about the question: what is the safeguard, and what is the safeguard? What is it not? The safeguard did not create the imbalance which started in last year in March, April, and the opposite effect we have seen since January this year. So without the safeguard, we would have seen the same tensions and prices in Europe, and some supply tightness or longer delivery times. Also, not only because of the design and the purpose, but also because this is not unique to the EU. It's a global phenomenon. So, and ending on a more, let's say, positive view on what the safeguard is, it is a safety net. It is restrained in its design. It is not hitting each and every ton like the Section 232, and in particular because of the relaxation, which is the yearly increase of the volumes, whatever the demand volatility is, but the orientation of the safeguard is opening up. Yeah, it is in this respect also looking to the interest of other operators in the European steel industries, in particular importers and steel users. So I'll stop here and give back the floor to Charles. Thank you.
Thank you very much, Carl. I think we'll now open for questions, but I'd invite both Carl and Alessandro to stay around with their cameras on, because I think you can answer both of these questions together. The first question that I'm going to take is from Emmanuel Norsa, who asks, how do you respond to those pointing to the fact that Europe is suffering from a serious shortage of coil products? The European supply of coils is not expected to recover, but the supply chain is now struggling due to difficulties in importing material. Thank you. Carl, Alessandro, who would like to take that one?
Carl, if you want, I can answer. Well,
please go ahead, and then.
I think the point now is, and Carl already mentioned briefly earlier, we have some supply chain issues and some bottlenecks due to the fact that the supply chain has been widely disrupted by the pandemic and its effect, which have continued to materialize until today. We have a problem in the steel sector, because primarily what we need to bear in mind is that the steel production is a complex process which takes time to be fully restarted. So as Carl mentioned, we had a stop in production in Q2 due to the pandemic and the lockdown measures, and then with a complete depletion of stocks. And what has happened there is that when the rebound has materialized in Q3 and Q4, steel producers were not technically able to ramp up production up to the levels which were sufficient to meet this rebound in demand. And on top of that, in addition, we had the supply chain problems related to transportation costs, to scarcity of scrap, raw materials, and all these things combined together have made it difficult both to produce internally, to ramp up production to meet demand, and also to import materials to produce. So a combination of factors, but I think this is something which is rather a short-term thing, connected to the effects of a pandemic and its disruption of the supply chain.
Thank you very much. Carl, would you like to add to that?
No, fine.
Okay, well, in that case, I'm going to ask the next question from Poppy Carnell from MLEX. Hello, Poppy. What would happen should the EU decide not to extend the safeguard? Have you done simulations? Are there examples and figures you can share about what would happen if the safeguard were not to be extended?
Perhaps I can say something about that. Yeah, that's of course a fundamental question. Again, if the EU decides to to extend the safeguard on whatever modality or time horizon, but assume then it would be based on the consideration that the risks are still there. The risk which was at the origin of the safeguard, which is the continued Section 232 and the risk of deflection. So that would basically mean that that there would be some clear assessment of the continued existence of that risk. Whether that would happen, that's of course another question. I think, Poppy, this is basically what your question is about. What do we think will happen or would happen? One point of course, the general point, global access capacity, yeah, that's always there. That's the easy part of the answer. But if you go a bit more specific, an important source to look at is to look to the behavior of the imports during the safeguard. You may know that when the Commission imposed the safeguard in 2018, this was a global quota for hot rolled, which is the key product for the flat carbon steel frame. And immediately one saw that countries like Turkey and also Russia took a disproportionate part of that global quota. And they effectively, beginning 2019, disrupted the European coil market. These are two heavyweights next door. But the same happened also even when they had a country-specific quota, but they had access to the residual quota for long products like rebar and wire rod. So the Commission saw very quickly that under the first original design, import surge and market disruption was still taking place. This is why we went through two processes of reviews. And the reviews were not there just to relax the quota. It was to tighten the modalities based on the experience that the fundamental function of the safeguard was not fully ensured because of some design, what we call design weaknesses. Yeah? Now, most recently, since April now, we are in the last quarter of the last safeguard year, April to June. And now we have to go a bit into the technicalities, but in the last quarter is quite unique because it allows countries for certain products that have their own individual quota, when they early consume their quota, they can go into the residual quota. Take again the example of hot rolled flat, the key product, where India, Turkey, Russia, they all have individual quotas for that quarter. But India has immediately consumed that individual quota and has even also in the meantime, and I talk here up the situation end of April, so very recently, has even also used a significant part of the remaining residual quota, which are kept to 30% maximum per country. So these are, of course, individual situations. They are referred to the statistics here, but it shows that throughout the whole process of the safeguard, there has been permanent pressure from several countries to penetrate the market in a disruptive way. And that means that this permanent pressure could have its full, let's say, effect if the market learns that there would be no extension. In particular, when there is a healthy steel demand. When the demand reduces, we see that imports also reduce, and sometimes even more than the demand. On the other hand, what we also see historically is that when the demand goes up, then you can often see that imports increase even over the demand increase, and then you have the disruption. So this is basically what we consider in looking into the question what may happen if there is no continuation.
Thank you very much. I would like to now ask another question from Emanuele. We may be able to answer this, it depends. Alessandro, I think this is probably one for you. Can you comment on the possibility of scrap exports being limited from Europe? What is Eurofair's position? Thank you.
I don't know whether we have a position on this, frankly. I know that there has been some scrap export restrictions that has been put in place recently by some non-European countries. So this is something which is already happening at the global level, let's say, because there's a scrap shortage and there's a scrap issue worldwide. But I do not know whether we have a position on that, frankly. Carl, are you aware of that?
Well, there is a reflection in our industry on this question, but it is not in terms of trade restriction. The problem is that, in fact, scrap is basically the only critical secondary raw material we have in Europe for steel making. Iron ore and metallurgical coke mostly you have to import. So scrap we have. But scrap is something that I think scrap is one of the raw materials that is globally most under export restrictions in the world. More than 100 countries, one way or another, are restricting in order to keep as much as possible scrap for their own consumption, in particular steel making. So it is, and these are trade measures. Now, export restrictions in industry, I don't want to make any reference to the COVID crisis, but export restrictions are a taboo in Europe, and it still is, as a trade measure. So you don't get far if you want, as a European industry, to call for a blunt export tax or even a ban on exports, like Indonesia, for example, is doing with a lot of things. But again, a lot of other countries I mentioned. On the other hand, there is, from the environmental perspective, there is a concern, and that's also a policy concern. It's not just an industry concern about, scrap, is it waste or not? If it is waste, then it has to be regulated in terms of leaving Europe to places who do not care and would create their environmental burden over there. So from the environmental perspective, there are reflections also in relation to scrap. But again, this is not about blunt trade restrictive measures on scrap, which I think is not on the agenda.
Thank you very much. I'd like to address 2 or 3 questions, merge some of the questions that we've received, particularly relating to prices and supply. Now, we at Eurofair can't talk about prices, it's for competition policy reasons. We can talk about supply and markets. And we've had a question from Stefano Gennari from Steel Orbis asking, is this tight supply and current price level the new normal? But equally, as we've seen from another question from Eric Brandon, there's still massive overcapacity globally. So how come there's both overcapacity and tight supply in Europe? How are those two reconciled? So perhaps either Alessandro or Carl could answer those questions.
Well, maybe I can start answering. Maybe Carl, you can make additional remarks if you want. Well, on the so-called new normal, well, no, we don't believe it's a new normal. It's not sustainable, but we rather believe it's a more short, as I said, it's a short-term thing, short-term phenomenon. We should ease over the coming weeks, or so we will return to a situation which is more sustainable. And as I said, it's very much linked to the problems that steel producers have in ramping up production to meet demand, which has rebounded stronger than expected. And also in relation to the issue of overcapacity, there is no overcapacity in Europe. whatsoever. We, on the contrary, as Carl has also mentioned, we've seen in recent years, as it also witnessed by OECD data and other sources, other major steel-making regions have constantly increased their capacity and their production, whereas in Europe it was almost the opposite. So capacity hasn't been expanded as much, and now we don't have overcapacity. So we're actually, steel mills are almost using the existing capacity to ramp up production and to meet the demand. So there are, let's say, two different pictures within Europe and in the rest of Europe, which is one of the main arguments which justify our positions on trade policy as well. So, Carl, if you want to add something.
No, thank you. It's very clear. Thank you. No.
Okay, well, thank you very much, both of you. I'm just looking for questions that we haven't yet addressed. We've mostly done the safeguard stuff. We've mostly done the overcapacity elements. There's a question here from a user who says, China turned from an exporter of steel to an importer of steel in 2020, and this has so far continued into 2021, according to the question. And if this lasts any longer, could safeguards might perhaps be useless thereafter? I'm not sure how that question follows. No, so that's not one we can ask. Poppy Carnell asks, are there certain products you're more concerned about in the context of the safeguard? When you say that quotas are being used up by countries such as India, which specific steel goods are these?
Perhaps I can, Charles, can I react on the question you mentioned just before the Poppy's follow-up, because it's an interesting one about China.
Export to China, yeah.
It's true that China has become a net importer of steel. I think it is mostly for semis, but whatever. So we are we are far from the situation of 2015. Now, it's also, I mean, this has economic grounds in terms of the China was in last year the only country, and of course a major one, which still had positive demand, and in particular their production increased even on that. So there was a totally different situation in steel balance than basically the rest of the world, in particular the developed economies. So that basically explains why they were not under the pressure to massively export, rather on the contrary. Now, what that means for the safeguard, I think that's an interesting comment, but it also it's really about sometimes the confusion about safeguard. The safeguard is not there because of Russia or because there is China. The safeguard is looking to the whole world. It looks to volumes. It's not even looking to prices as such, or subsidization or dumping. It is a rather simple instrument looking to an exceptional situation where an industry that is under safeguard in a country, in an economy, has a bit of time out from import competition. And whether that comes from China or from Russia, that's not the point. Of course, we know that if China starts to export massively, then the whole world shakes, yeah? All markets. Yeah? This is not or less the case, but again, you still need to look a bit per product, finished products, yeah, to get a more precise view on this. But it is less the case today. But again, the disruption that took place in the beginning of 2019, where the huge hot-rolled flat import surge came from Russia and Turkey, not from China, of course not, because we have dumping duties on China. So it is while fully agree that, of course, what the behavior of China has a global impact, no doubt, but it's not only that. Yeah, So that is an important point, and it is exactly what makes the safeguard typical and different from a punctual dumping case against a country for one product.
Excellent. Thank you very much. Another question on trade policy, this time related to the carbon border mechanism, that's the hot button topic of the day. And the questioner asks, would this essentially be a defensive trade measure that would deflect exports from Europe to other markets? Carl, would you like to have a look?
Yeah, I don't want to go too deep into this because we have colleagues who are much better informed on this. But look, it's again, it's like the safeguard. What is the safeguard and what is it not? The same should be also understood with regard to carbon border measure. What is a carbon border measure and what is it not? What it is, as I understand, is that it is an environmental climate change policy measure. It's not a trade policy measure. It is about, it has the form of a trade measure as far as it includes some levy or a measure at the border, technically, but it is not pursuing trade policy. It pursues Europe's Green Deal decarbonization objectives. And it is in function of this policy that the carbon border has to be evaluated. Any carbon border adjustment measure, which we still haven't seen, must be evaluated. And it will be also designed for that purpose, not to restrict imports as such.
Okay, thank you very much, Carl. And I think we're just going to take one final question, fairly straightforward one really, from Francisco Moreira, who's asking for an idea of the order of magnitude of excess capacity as we know it today, for example, out of China, and how it relates to the rest of the world currently. Alessandro, you might have an idea on overcapacity at the moment. What are the latest figures that we have available?
I don't remember by heart. Maybe Carl, you know.
Now, I mentioned, and this is just a top view, and this is the OECD. This is public.
Yeah, the OECD. Yeah.
Data. It's estimated about 650 million tons globally, excess capacity, measuring capacity with the production level of 2020. Now, I think it's not exaggerated to see at least 50%, if not probably more, only from China. So that is a bit of top of mind without seeing all the numbers now in front of me, how I would see the situation. Upcoming excess capacity regions include, for example, Iran, massive. You have Indonesia, you have Vietnam, and this is proliferating. Yeah. Also Turkey. Turkey is investing in 2 new blast furnaces at the moment. Turkey's industry. This is next door. So I think it will be even more dramatic. We'll see more dramatic situations over the next years.
If I may add one thing, complementing what you just said, I mean, every comparison between the EU as an economic bloc and countries like China or Indonesia should be done very cautiously, because I mean, all these countries, China and Indonesia and India, which have expanded their capacity in recent years, they have, I mean, these are countries where the government have been boosting very, very strongly capacity and steel consumption by steel using sectors which are also government owned and government controlled. So this is something which is very much government driven, and in China, particularly since the COVID-19 outbreak, the recovery has been massively driven by the government, which has boosted steel production and steel capacity almost at the maximum possible level. So it's something which must be taken into account, because the EU cannot take measures like that. It's something which is totally, in the EU, is totally forbidden. So we must take into account the fact that in these countries there are economic policy measures which are totally and strongly government supported, which are not possible here.
Right. Thank you very much. I think that was the last question that we had that we haven't yet addressed. So with no further ado, I would like to thank both of our guests for having joined us today. These are both my colleagues might be available to answer follow-up questions if necessary, but you can do so by writing to communications@eurofair.eu. The Economic and Market Outlook report has just been published on the Eurofair website and will be sent along with the presentations that you've just seen to attendees of this meeting. So with that out of the way, I would like to again thank Carl and Alessandro for their time, and to you for the audience for having joined us today. The next biannual webinar will be held in 6 months, in around late October, with the release of the figures for the half year 2021. So until then, thank you very much for joining.